Hey you guys, what is going on? Shaquan here from SLFX Trading. In this video, I'm going to show you guys what trading 100 pips really looks like. Now, if you saw the short that I just updated on YouTube and or my Instagram for an Instagram reel, then you will have seen the quick video that I made on what is a pip. I'm going to explain it deeper in this video. Now, when it comes to trading Forex, we trade currencies. Currencies have value, they have a numerical value. So if I were to go to the store and I wanted to buy something, I'm going to use my currency and exchange it. So I'm basically bartering, right? You do the same thing each and every day, but we buy and sell currency. So for example, I am on Australian dollar, New Zealand dollar. I'm going to show you guys what the analysis was here on this currency pair. So basically, I sent this out last Thursday before this move actually happened to the upside. I was telling my students and clients, hey, I see that price could have a potential pullback because we just made a new high at 113.7. I'm thinking price is going to pull back down and then we're going to buy back up into our negative 27. So you guys can see that I have the written analysis over here as well. Okay, so from there, you guys can see how price played out as well here too. But there's something I want you guys to be aware of are the pips. How many pips could I have gained out of this? And this is going to help you also choose the currency pairs that you are trading. So I want you guys to look to the right hand side where I have my price scale for a second. You guys can see that I have a price range tool here. And it's basically telling me how many pips price has moved along the way as Australian dollar has moved up. So I have it going from $1.11, $1.12, $1.13, $1.14. Now I'm saying dollar because we're trading the Australian dollar and New Zealand dollar. So I'm basically trading how much would it have cost the people in New Zealand dollar to buy one Australian dollar. So how much in the dollar in cents, right? So we can see here, and we're just going to go here from September 7th on up. So between September 7th, and I would even say here around September 12th, they could buy the one Australian dollar between $1.11 to $1.12. You guys, that 100 pips, there's a 100 pip increment, that 1 cent increment. So 1 cent equals 100 pips. If you were to break down 1 cent into 100 pieces, those are the pips, the full 1 unit or one size of one New Zealand dollar cent equals 100 pips. And then you guys can see here from September 16th, between September 16th and this range or 13th through the 15th and 16th up into the 19th. So we'll say between the range of the 13th and the 19th, which is about six trading days over a week. You guys can see price range between $1.12 and $1.13. So it took about 6 days for price to move up one whole cent or 100 pips. And then we can see price pushed past. It's not a level, it's a price. It pushed past $1.13 and we bought up. And price range between $1.13 to $1.14. I would say between September 19th up to where we are now, September 26th. So, looking at that from September 19th to the 26th, that's over a week that we've been here sitting between $1.14 New Zealand dollar cents, $1.13 New Zealand cents. That is 100 pips or 1 cent as well. So when I sent this out, what I was doing was I'm trading in between that 1 cent or those 100 pips, right? Now, when I sent out the analysis, it was around a 1-to-1, 1-to-10 risk to reward trade. I took two positions, was stopped out for one for profit, stopped out for one for a small loss due to these wicks here when I moved it up. But this was a good trade overall. It was really good analysis overall. So anytime you're analyzing a currency pair, when it comes to your pips, what you want to do is keep I would say the currency that you're trading. Let's just say if it was Euro yen or USD Japanese yen. What you want to do is understand how to read the currency pair. So let's just say, for example, you're trading United States dollar Japanese yen. How much will it cost the people who use the Japanese yen currency to buy one USD or one United States dollar? So that amount is going to be in the yen, and or let's just say euro JPY. How much would it cost the people who live in Japan who use the Japanese yen to buy 1 euro? And if you look at that price scale, it can be anywhere from 141s, 142s, 143s, 144s. So those 100 pips equals 1 yen increments. Okay. This also depends on how you're going to be trading the currency pair and the speed of the currency pair. As you guys have seen here, it could take about, I would say, a week for price to move 100 pips on the Australian dollar New Zealand. So we can say that this is a slow currency pair because it's not going to reach the next cent very fast. But if you trade a pair like pound New Zealand or pound AUD, those pairs could probably move 100 pips within a day or two because they can get to the next 1 cent faster. Or if it's like pound AUD, it can get to the next 1 pound, 1 cent, 1 Australian dollar cent faster. Pound New Zealand dollar, 1 New Zealand dollar cent faster. All right. So when you talk about currency pair speeds and movements, that's what we mean. How quickly can you get to the next 100 pips? Okay. So I pray you guys enjoyed this quick video on what a pip really is and how you're actually trading your pips, but this is also how you're profiting your pips, because it does dictate how many pips you gain and how many pips that you could also lose. So when it comes to a slow currency pair, the slower that price moves, we call that our slow money making currency pairs, because you're going to have a lower lot size or a lower pip count in stop loss and a lower pip count in your take profit. The faster the pair moves, you're going to have more pips that you can gain for take profit, but your stop loss might tend to be a little bit bigger as well. And that does affect your lot size. The smaller the pip count is for your stop loss, the higher your lot size could potentially be. But the faster pairs, the more your stop loss is in pips, the lower your lot size might be. Okay, I'll probably end up doing another video to show you guys how that is actually calculated as well. But just focus in on what I just said now, because it does dictate how you identify and read the currency pair's name alone, how many pips the currency pair you're trading can make win or lose. But it also does dictate the fast pairs versus the slower currency pairs that you're trading as well. So I'll talk to you guys in the next video.